Good morning again. I'm going to start with some announcements, and then we're going to lead you straight into the main program. For those of you who have been here, this is quite an institution for not only for journalists, but for a lot of associate members who actually work around centrals, and it's quite often to see all the financial people and who work around this community, and it's great to see everyone here. There are a couple of things happening. First, introductions. Myself, I'm Joe Pan, governor's member of the FCC, and it's my pleasure to welcome you. There are a couple of things happening. March is a busy month for us. Actually, at lunchtime, today, there is a special talk for lunch that is happening. Is Money Machine, a trailblazing American venture in China. So if you are going to be around, there is some seats available. And then actually March 1st, we're going to have a club dinner called MIM the News, How Social Media is Changing Journalism. So if you get a chance to see the exhibitions at our main bar area on the wall, there is quite a bit of news and in the different formats that is new and trending. So please do join us. And there is also for journalists, those who are journalists, especially those who are in early career, we're having a networking event and workshops to match some of the mentor with the early journalists. And that's happening on March 6th. And then we have another club lunch. Unfortunately, it's sold out, a lunch with former Singaporean Minister for Foreign Affairs, George Yeo. And so if you want, you can still be put on the waiting list. We also have a club screening, and that's where a lot of filming at night's happening. It's called The No Ordinary Life, a documentary about 5 pioneering war camera women at CNN. And that's on March 13th. So with that, I want to welcome again all of you. The rundown for this morning, we will do a quick intro of our main guests, and we will open the floor for Q&A with another guest joining to our panel. And so with that, most of you have met Duncan in the last few minutes or so. The Honourable Duncan Chiu is a renowned entrepreneur, venture capitalist, and Let's Go member. Duncan is the youngest child of the Chiu family, which has played an integral role in the history of Hong Kong. He holds a Bachelor of Science degree from Pepperdine University and is the president of Hong Kong Information Technology Joint Council. Additionally, he is the convener of Innovate for Future, a think tank representing some technology startups in Hong Kong, and the chairman of several prestigious organizations such as Hong Kong TDC, Information Communications Technology, ICT Services, Advisory Committee, and Information Technology Service Committee of the Hospital Authority. Duncan is also the founder of Radiant Venture, a venture capitalist firm that invests in early-stage tech startups, primarily focused on Israel and Greater China. His wealth of experience and expertise in the tech industry makes him a valuable speaker in the topic of Hong Kong's role in regaining its edge as a FinTech hub. So with that, let's welcome our guests. And Duncan,
thank you. Thank you, Joe. Good morning, everyone. Thank you for the introduction. Morning. Good to see all the crowds back and physical meetings. Hopefully, we get the mask off order tomorrow, so that we can meet more with more freedom. Thanks, Joe. I've been prepped by the committee that we're not going to have too many tech persons, so I prepare something more like why FinTech in Hong Kong for beginner kind of thing. But since I've been talking to some of you here, since most people are quite tech savvy, right? So I think I'll keep the PPT short, and I heard from Joe we gotta actually keep more time for the Q&A. So I'll quickly go through a simple PPT I've got here, but I'm sorry the screen might be too small for you to see the words. I probably just go through that with my speech. I think the whole FinTech journey, if you look at it, I mean, why Hong Kong, right? I think it's all natural with the base of the AU, the professionals we have in Hong Kong, the FinTech, the financial histories of Hong Kong, the background of professionals that we have. And I would say the whole journey of FinTech, we sort of start like in 2015, 2016, sort of like everywhere in the world, because the term, well, I think started in 2014, around that time, that was something we call FinTech. I remember the time around 2016, we have a delegation from Hong Kong to London. We sort of, at that time, start promoting Hong Kong, building up FinTech. I think Paul, our current financial secretary, also came with us for that delegation. It's actually, the interest level was very high at the time in London, that a lot of companies are interested in Hong Kong, what we should do, you know, with the base that we have. And I would say that there were also, for the last few years, the things have been fluid. You know, what is FinTech? I think there has been also discussions among people, and you know, there were arguments between FinTech and TechFin, because at one time, especially in mainland China, people would think that, you know, tech company can dominate and replace the whole financial system, reset all the rules, you know, regulations, professionalisms, you know, all things determined by maybe big data and data analytic results, and technology should drive the financial sector. But I think you all know that the things take a big turn in around 2020 when Ant Financials call off the IPO in Hong Kong. I think that actually set the stage for the FinTech area. You know, we have to define FinTech as you still have to rank professionalism, regulatory issues, compliance as a key point for FinTech development, because it deals with people's wealth, deal with people's capital. So all the systems that we set out actually should be there. Tech, you can say, is an enhancement, or, you know, is a tool whatsoever. It helps efficiency, it helps to do better product for financial sector. But definitely, you know, we should not forget about the professionalism, the regulatory frameworks that we have built. So that comes the opportunity for Hong Kong, because you know, when we talk about, you know, having tech dominate FinTech, you need a big market to test out, you know, what to do next. That's actually demonstrated in mainland China a lot. So, I mean, with Hong Kong, we come back to the systems that we have, the infrastructures that we have. I can actually go through that. And, you know, since then, we have done several different policies in government to test out FinTech initiative. We issued 8 virtual bank license, 4 digital insurance license, and then we just got through the virtual asset service platform under the anti-money laundering ordinance in LegCo. And then we provide some FinTech training program, you know, the fast track POC program by the government. And we also announced the FinTech 2025 strategy, and also the announcement from the government about the, you know, the way we deal with Web3 as one of the big industry we should look at in Hong Kong. So government has thrown out forthcoming policies since then for the last few years. And, you know, for the Hong Kong MA has the FinTech 2025 strategy. I might just skip that because you can look at that online. And startups, well, the number of startups, you know, in Hong Kong, since we have the Innovation and Technology Bureau set up, it was actually set up in 2015, end of 2015. I think at end of 2015, we have less than 1,000 startups. It's 1,000 something here. But, you know, we can see that this number of tech startups grow from the start of the ITB, which is now called the ITIB, you know, from 1,000 something startup to more than 4,000. And within that, FinTech startups account for a big portion of the total startups in Hong Kong. 2021, say it's 400 something. But I mean, according to sharings from Cyberport, you all know that around 800 FinTech startups, or more than 800 FinTech startups are now in Hong Kong. So that would account for about 20% of the total tech startups in Hong Kong. Well, sometimes we also query, whether we should qualify Hong Kong's tech development by the number of startups. But I mean, that's actually one measurement among, how many unicorns you have for how good you're doing tech. I mean, I do go to Israel a lot. If you talk to in Israel, about 8 million people population, similar to Hong Kong, they have around 7,000 to 10,000 startups, when they do the calculations. So we are about half of Israel in terms of density. And the sectors, people working in FinTech is actually quite diverse. I would say maybe 2/3 from what I know, companies doing FinTechs are providing B2B service, which they mainly want to sell their product to banks and financial industries. And maybe 1/3 of them are to C, providing, let's say, robo-advisory, wallet service, investment services, etc. So it's quite diverse mass. And the good thing is, I think we have a lot of good financial experts in Hong Kong. A lot of the startups in Hong Kong are found by people from the financial sectors or having some years of experience in the financial sectors. You don't see too many kids, right after graduation, start a company in FinTech, because you have to have some kind of skill set in the area to start a company. So that's the good thing that provides depth in the products that they are working on. And the adoption rate, I would say it's still some way for improvements. You see a lot of banks would say they tried out some startup services, and mainly on some payment, wealth management area, and some tools in doing KYCs and internal audits, analysis, etc. So I would say the adoption rate, there are still ways to improve. And the proof of concept, what we call the POC period, is certainly quite long. So it's not easy for a startup as well when they, as I said, 2/3 of them are in B2B area. And it will take them times to actually sell their product into banks because, finance sector still, the validation period is actually quite long. And, there has been, we need to look for improvement in the sandbox that we are providing, how to really get financial sectors to adopt more technology. And from the pilot trials, that these are things that went through the sandbox from the Hong Kong MA. And you can see a lot of them are RegTech. These are the low-hanging fruit for finance company to adopt. And there should be other more that we should try it out soon. So this is, I don't think you can read these. This is actually in our LegCo, what we've been gone through in terms of the legislation procedure. There has been several bills that we talk about that we have discussed, we have passed, and there will be several other bills that will come through the system that will touch on FinTech or broadly tech and the regulatory engagement in the tech society. And this is the budget we just had last week. Financial Secretary's budget, he touched on three main development area in the future of Hong Kong. So the three area, he actually put in investments and emphasis the development in the near future. Digital economy, that include what we talk about, AI, data related. And I'm happy that one point I did submit and push through to FS, which is the supercomputing center. I have advocated the government to put in more resources for digital infrastructures. We want to build our digital economy in Hong Kong. We want Hong Kong to be a tech center. Government has to invest in some digital infrastructure. We can talk about that later. Supercomputer center is one thing, maybe a public chain, maybe some government use case, a digital ID. These are areas we should invest to jumpstart the whole digital economy. And Web3 is also one thing that he mentioned has big potential in Hong Kong. I definitely think now we are at the very early stage of Web3. We just said we have about 1,000 companies in FinTech startups. I can say we can accommodate another 1,000 in Web3, which is something we can really encourage people to come to Hong Kong to start. And now, if you ask me what Web3 is, it's actually, I would rank it as 2002 for the internet, where you've gone through a valuation bust, in year 2000, which is what happened to crypto and Web3 related company Metaverse last year. We had a valuation drop. It has been overvalued. And a lot of people will anticipate things can happen, but you need the digital infrastructure to be there to deliver what people promise today. So this is actually like internet in 2002, right? When things get promised in year 2000, people realize the earning is not going to come in soon, and the internet infrastructure were not there at that time, and then valuation drop. Finance people got too excited, and then it get to a trough of valuation death spiral. And but what happened in the next 20 years? Internet or the digital economy provide companies like Tencent, Alibaba, Amazon. This company fulfill what they promised in year 2000, and it changes people's the way they live. I think this is what's going to happen with Web3. We are now at the very early stage. Last 2 years, we might see some valuation boom, and a lot of money jump into the industries, and then we have these correction now. So now I would say this is the right time. We should invest in Web3 and get the infrastructure built up and attract talent to Hong Kong. Then we might catch the next Amazon in 20 years in Hong Kong in the Web3 area. So this is things we've been pushing. And another thing that FS mentioned is the International Green Tech and Green Fi Center. The government just tried to launch the tokenized green bond earlier this month, February something. And it might be a small trial, but you can see it changes the settlement time from T+5 to T+1. So I think that's not just a show of token, but show of how tech can enhance the current system. So we're going to put in more effort into that. And the thing is, it's not going to be an application-only green tech development. Hopefully, we can build it into a green tech industry where we can create products, set compliance, certifications, professional standards, and then export to other countries, RCEPs, Belt and Road, or other countries. So there hasn't been too much standard fixed, global standard fixed in that area yet. So we can do, Hong Kong Exchange is going to do the carbon trading platform soon. So I mean, with all these set up, maybe we can build green tech as to another industry for the next growth in Hong Kong. So attracting enterprise and talent, Charles is here. You can ask Charles about that, about the attracting enterprise and talent thing. I'm not going to go through that, but I think that's an approach that we make public already. So these are the things you can Google online. The money that the government put in for in the budget promoting INT. So I'll keep that short. Maybe we should go to Q&A session. Thank you, Joe.
Well, thanks for a very comprehensive view and also sharing some of the insights you see in the legislative process. Well, now let's move to the Q&A sessions and take a deep dive into some of the strategies and plans that you're part of it or the government has put in place. First, I know you mentioned Charles can address about the talents issue, but I want to pose it to you specific to FinTech. So the government has received over 100,000 talent visas, 10,000, and of which some of them are, I'm sure, relating to FinTechs and various talents. So can you give us a view? Is there any specific percentage, and how do you measure, and how do you measure the success or even the failure? Were there any involvement from your part in looking at what's the goal? Is there any FinTech percentage of talents you want to attract to the sector?
I think attracting talent is the number one key if we're going to succeed in being a technology center. I mean, as a tech and innovation rep in LegCo, I think the number one question is, when I see people, they will say, hey, can Hong Kong do it, right? So I think I have to be, I'm personally quite subjective, having been involved in the industry for 20 plus odd year as an investor. So I travel to all places with good tech ecosystems. I think the number one key point, whether you can build it or not, is talents. If you have all the talents there, you got the main ingredients. So how do we get the talent in Hong Kong? I mean, financial center, we have the financial center in Hong Kong, but not all financial participants in Hong Kong are homegrown. We provide a good ecosystem, we provide opportunities, and people come. You know, you have to let people build a company and be profitable in Hong Kong. You know, we have all the tax and everything, we can skip that. But how do we get the talents in Hong Kong? So I think that's the number one, that's the holy grail to, you know, having a successful tech ecosystem and tech hub in Hong Kong. So I think we've been throwing out policies about, you know, how to attract people in Hong Kong, and I think I have several submissions to Hong Kong looking at how Singapore do it, you know, how Shenzhen do it, you know, how Israel do it, how other people do it. So there are ways, there are areas that you cannot replicate, right? Like Israel, because it's the center for all Jewish people, right? 15 million Jewish people, you know, this is the home. So this is a bit different for Hong Kong. So what we can throw out is opportunity. And opportunity goes hand in hand with the introduction of enterprise into Hong Kong. Because we have not really a big workforce in tech in Hong Kong. We have around maybe 200,000 people working in tech-related job. And for people really working on, you know, research level, upstream R&D, we have only 40,000 people, which is less than what Huawei hire, what one company hire in mainland. So, I mean, we need to provide opportunities for people to come here to not just start a company, but also to work here, to have opportunity to switch between companies that you, like finance people, you come to Hong Kong, you work for HSBC, you can go to Standard Chartered, you can go to Citibank, right? But for tech, you know, do we have that depth? So I think it goes hand in hand about getting talents here, but also getting premium job opportunities in Hong Kong. So attracting companies or major companies to Hong Kong and providing different job capacities in Hong Kong go hands in hand. So I'm actually quite happy that, you know, now government initiative will come out, you know, we have to attract both, you know, not just throwing out policy about, you know, making it easier for talent to come to Hong Kong, the one you mentioned, 10,000 in a few months. You can see the demand for that. But a lot of these people, they submitted the application. Many of them, I just met a few yesterday, and they say, hey, I can't find the job I want in Hong Kong. You know, these are people that, you know, at one point we have shortage in the tech industry. We want to hire people for providing system integration, you know, they're long queue waiting for government projects, related projects, and a lot of the industry told me they don't have enough labor to work on the projects. But at the same time, do I have enough, you know, let's say research-based innovative offering for people coming to Hong Kong? I mean, these talent scheme people that they are like doctor, postdoctor grade, they're coming to Hong Kong. Maybe that kind of job offering is not there also. So we have to do it quickly in these 2 years. Otherwise, people getting the application in 2 years, you know, we get these talents in Hong Kong and they're not finding the job that they want. Then 2 years later, they will leave. So we have to have this fast to you know, to actually have all these people we can absorb into it. So in terms of the percentage of people in Web3 or finance related, I don't have the number, but actually from government said, from the government number, you know, among the 10,000 plus applicant, you know, about more than 10%, they apply through the high salary income group, which is 2.5 million a year earning. So these are, a lot of these are, I would say, high-level skill set labor. And that area is, you will have to create more opportunity for them to stay in Hong Kong. So I would say the pace of us to bring in tech leaders or maybe big technology companies from mainland or outside of Hong Kong, outside of China, is equally important. Because otherwise, 2 years later, these people come, they might also leave. So this is the thing that we have to do now. But I would say a big chunk of the people I meet are Web3 related, biotech, material science. I met a few yesterday. So, I mean, they are really experts in different areas. And when we talk about blockchain related, a lot of these talents are Chinese. They're either in the US or in mainland China. And the policy in Hong Kong also attract them. So these also account for a big chunk.
Well, it's interesting you mentioned the word stay. So has there been any survey or studies in keeping track of people who have left due to various reasons, including COVID restrictions? There's been a loss and an outstream of exits of talent. So has there been any balance of checking what is that all the ones bringing in, are they filling in the vacancy or they add additions to the industries?
I think for the general population, that the official number with the government announces is about what, 200,000? Is that I think around that people that actually left Hong Kong. And for tech sector, there isn't any official number we have, but a lot of the company we talk to, 15%, 20% of the people they hire that has left. Maybe that's a norm for a lot of the company. So at one time, we have to getting more people back into the industry. So in Hong Kong locally, we do a lot of retooling job, retraining job. A lot of the company are doing that to train people from other sector to become labor in the tech sector, to join the labor force in tech sector. That's one way. Second thing is, of course, the relaxing of the talent scheme to get people coming to Hong Kong. And there's actually a lot more, I would say, mid-level job vacancy in the industry where, people with a few years of skill sets, this is the area which is much needed in Hong Kong, but they may not qualify yet as the talents that we define in the scheme. Which is also somewhere we have to think about. If we want to build all these in Hong Kong, we want to be a tech-savvy city, and with the ambitions that we set, we definitely need a lot more people, and maybe the talent scheme is not enough, if you ask me. Yeah.
Thank you for the straight talk. So let's move to another topics more on the regulation side. So you already have this slide up. So we experience, or we even say that a lot of the crypto community or the virtual assets and digital finance folks experience what the government has done, new updates on the legislative framework. And with that, how can Hong Kong regain some of the momentum that's in probably a few years, even pre-COVID days, there was pretty vibrant community of crypto operators and Web3s, and all the digital assets were really great. How can we regain that? So walk us through this process, and what's your thoughts?
Yeah, I think this chart, is hard for you members here to see, but it's actually in my more than 1 year experience as Electrical. I think we are all playing catch-up work. And there has been several bills that has been postponed or retabled at Electrical and really took us some time. And there were actually quite a lot of legislations that we want to go through and has gone through, regarded to tech and, and Web3, FinTech, as we mentioned. Look at the copyright ordinance. We just had reviewed the amendment that we gone through last year. It actually took us 14 years, there had been some disputes, discussions on that, but it took us 14 years to upgrade the copyright bill. And we wrapped that up, but there's still many open ends left in the bill. We yet to be discussed. Let's say one thing we raised, a lot of other countries are discussing about the AI generate content. We leave that open. With things like ChatGPT, you look at now, how do you deal with the copyright issue of things created by AI? Let's say from the reporting area, right? You generate that. There's going to be more and more use of that. You cannot avoid that. People don't use AI will be replaced by AI. These are the only people replaced by AI if you don't use AI. So, but how about the content? Who owns the content? Is it the software, the company that makes the software? If it is open standard, how many works do you have to contribute to make the ownership of that? And now they are like AI generate graphics, things like Blue Willow or Midjourney. These are all tools you create AI generate content, the graphic content. So who owns these? So there has been many discussions, and in the US, maybe some company try to set consortium like OpenAI. With the consortium, they try to lay out standards and user agreements and innovator agreements. But even at OpenAI and GitHub, there has been some court cases in the US last year to define who owns these products, right? Because if you have value in future, I created an AI superstar and making a lot of money, maybe the company will come out and claim ownership of that, to me. So without a clear legislations, you also limit, let's say, AI development. So I mean, these legislations will all become relevant in Hong Kong. Cybercrime, I think I skipped that for next discussions. Yeah. Cybercrime will overtake physical crime very soon. And do we have enough labor force in the police to deal with cybercrime? Because when the trend is there are more cybercrime, but we have more police on the street than people dealing with cybercrime. That's another thing. We're going to skip that. But I mean, the regulations-wise, legislations, we also have to cover the cybersecurity. So we have the discussion of the 5 cybercrime legislations, and we don't have any cybersecurity law in Hong Kong, which is comparing to GDPR in Europe, and there's also the cybersecurity, data security law in Singapore and also in mainland, but we don't have anything. So that's things that I've been also promoting. So when we go back to Web3, do we have a forthcoming legislation environment that will promote people here, give them trust, and at the same time not limit the development of the technology? That's actually an art, where you put the legislation and not restricting the development of the technology. I think the good thing is now, just like the discussion about FinTech and TechFin, I think a few years back we say that, okay, tech is invincible. With tech we can replace all finance people can go home, right? Just a system can do it. But now we think it's not. We have to have regulatory framework in place, and tech will play an enhancement to FinTech development. I would say the same thing for Web3, virtual asset, cryptos. We all gone through the FTX thing last year, and I think the industry understand that we cannot just let a kid jump out and write the white paper, do an ICO, create liquidity, and then there goes 2 billion and then 5 billion. It doesn't make sense for me. I mean, so how do we legislate the development of that at the same time, promote the industry, let people wanted to develop to come to Hong Kong, and not also killing, the imaginations of these people. So these are the things that we have to think about in the virtual asset related legislations, and we have to be the first. We have to come out first and say, hey, we do this and that, and so that people will come. We cannot play follower in this. which Hong Kong always do. Every legislation where you go to the table to the government will say, okay, let the US do it first, let Europe run it first, and a few years later we're going to revisit and see whether we should think about this in Hong Kong, and that's 10 years later, right? So I mean, if we want to be a tech center, we have to be, adventurous. So how do we go more adventurous in these? So I think we're doing a little bit better. People will say Singapore lead in the MAS, come out with a lot of legislation issues, and Hong Kong has been very conservative in the last 2 years, and many companies moved to Singapore, and you also said there's a big change in attitude since last year, since what happened to FTX, and I think I get a lot of the government officials are exploring this, but we also have to have a deeper understanding of what's happening within the government and also within LegCo to actually push through these legislations. So good thing is we have the announcement last year, declaration about the Web3 development from the budget, and also through AML we have the virtual asset license, service platform license, which will be in place starting on June 1st. And then we have the stablecoin consultation. Hopefully, I've been advocating we have a STO consultation maybe, and then retail investment restrictions. We do it step by step, but the thing is, maybe my anticipation is maybe we can go. Is it Dubai a good case, or maybe some Cayman Islands? We can't go as far as some Cayman Island countries. They provide that retail can invest into everything, and all crypto classes open, and people can issue crypto products here. I have doubt also on that if we go to that area, but professional investors, institutional investors, definitely, I think that's going to be virtual asset, crypto asset is going to be one asset class. They want to deal with it in Hong Kong. It's transparent. You have the banks, they have the capital efficiencies, things you don't have to worry about. If I want to buy, let's say, $5 million Bitcoin, maybe I can do it from a service provider in Hong Kong where you provide trust. But if I'm like a retail investor, I want to buy $500 Dogecoin, I don't know. That's a big discussion, whether we should have that in Hong Kong.
That's exactly. I think that itself deserves another talk. And we are thinking, and at FCC, we are bringing back the breakfast talks. And so we definitely will invite you back in for another probably make another entire deck out of that, just like breaking it down. So moving on to different topics, and I'm sure the insight you have given will inspire some questions from the audience later on. And so one last round of questions from me is, we have witnessed a major shift in the relationship between digital innovator and traditional financial institutions as they move toward a more collaborative approach rather than an adversary. The rise of digital payment in the finance as the core fintech space has significantly impacted the financial industry, and Hong Kong as a financial hub is no exception. So at this point, I'm actually going to ask one other guest to come up, to Paul Lee of Hong Kong Digital FinTech Association, who has invited about half of the rooms here, so it will be remiss for me not to invite him, whose organizations have a lot of open questions. So I'm going to ask Paul Lee to come up to the stage, and we get one more mic. And as we're setting it up and move maybe Duncan, you to the center, Hong Kong's RFID payment, such as the Octopus card, was launched back in 1997, a cutting-edge fintech tool payment method at the time. Yet today we are playing catch-up in e-payment from across the border, looking at China or even somewhere else. And so to both of you, I would like to pose the questions. With the emergence of symbiotic ecosystems, what do you think of the key factor that would deliver the success between fintech startups and the traditional financial institutions in Hong Kong? So maybe I'll ask Paul, and please
Yeah, thank you, Joe, for inviting me. And from what I dress, you can see I'm a fintech guy. The way that I see fintech is not a standalone industry because it has to solve some social problems in order to make a living. Therefore, I look at fintech industry's success in a different way. For example, virtual banks in Hong Kong, they are not profitable at all. But they have social value. For example, with the virtual bank coming to Hong Kong, then all the traditional banks lower the minimum deposit fee, cross-bank payment fee. I think that's the way that I see fintech value to the society or success of a fintech company. And we have put a lot of attention to the consumer side of fintech products, like because it affects our daily life. Like virtual banks, they help everyone living in this city to save some money. But I think the next level or an area that people less talk about is about how fintech can help business, like the to-B world. Because I work in Alibaba as head of payment for quite some time, and now I'm running a bank called Banking Circle to help the corporates to do cross-border payment. I measure myself as how much money can I save for a company to do cross-border trading business. And I think there are quite some things that we can do. And because I ask myself another question is that if fintech industry is doing very well, then what does that mean to Hong Kong? We have to look at that from the social value perspective, in addition to the valuation of all the fintech company, how many IPO unicorn that we have. Because at the end, Hong Kong economy relies on the real economy, the business. And also the fintech business or the financial industry will need to rely on the real economy as well. How many companies who can at the end pay to the banks. One number, I think why to-B is an area that for Hong Kong, because in all the banks, the revenue they generated from payment in last year is like 10 billion Hong Kong dollar. What does that mean? Hong Kong, we only have 100,000 companies registered. It means each of the company, very likely, consumer is paying pretty little for payment to the bank. Each of these company are like paying 100,000 Hong Kong dollar per year to the banks to get the payment services. You see, the margin is pretty big. It means that there are quite some opportunity that fintech can help to lower the cost. And there are some pretty mature solutions. Happening in US, Europe, and in mainland China as well. I actually think that I'm actually looking at my friend from virtual banks, and then they could take the lead to try to add some competition to this to-B market. And at the end, we need to have some long-term visions, sexy picture about virtual asset. But at the same time, traditional fintech, I use traditional fintech, will provide some short-term value to the economy. And I really hope that we, from government or from industry, give more love to this sector.
Duncan?
Yeah, I think just to add to that, I think from product side, definitely there has been many deployment in banks, and that's, I think you focus a bit more on the consumer side. But I think for bank side, I think it also improved efficiencies in a lot of the way they do business. So, and we know efficiency means competitiveness. So the thing is, if you don't use, these products, then, banks, we already know, the margins that they have today. If you lag behind in certain area, it could be damaging. I mean, an easy example would say is, you go into the street post-COVID now, you go into any random local Guangdong cha chan tang, right? These tea restaurants. You will see this one, you go in there, you use a phone, scan the code and order, and you pay without seeing anyone. There's a lot of cha chan tang like this in Hong Kong. And then there's these other next tea restaurant. You go inside, You know, you stand away and they have like 5 waiter inside, and you know they give you the dish and you pay with the cashier. You know, post-COVID, maybe in 2-3 years' time, if you don't go digitize, these companies will be killed because everything is transparent. You pay the same rent, you pay the same electricity bill, but then you hire 5 people, whereas the other one, they don't have to pay for any staff, and you know they amortize the expenses on the digitization. So I mean, same as bank. If you don't go for products, you'll be eliminated. I think that's the thing with tech. And you talk about product payments like Octopus. That's one thing we've been having a lot of criticized. We start traveling. Everyone go to Southeast Asia and tell me, hey, Duncan, I just got back from Vietnam, and this taxi I can pay with my phone. And, I went to Indonesia and they have digital payment everywhere. And in Hong Kong, we still have cash. I was in London last September, and everything is cashless. You go into a bar and say, I want to pay cash. I say, sir, sorry, we don't take cash here. And you have to pay with cards. So, I mean, these are things we can all deal with technology. I think the tax is already there. And these are things that maybe government really have to have the determination to push through to make it happen. The tools is all there. Previously, we say, okay, we have some intermediate product, like Octopus, credit card is everywhere in Hong Kong, so we still keep cash. And you go to London. I go to try to take the tube, take the loop, and you go inside there. I want to add value to my the Octopus card, right? Oh no, the Oyster card, right? I want to add value to Oyster card, and there's no way to slip in cash into the machine. You can add value by your app or by your credit card. There's no cash entrance for the machine. And imagine if we do that in MTR and say, hey, we're not taking cash. People will, or a lot of you are reporter. You will see in the news that people complain, hey, what about this old lady from, Finland? I want to do with cash. That would be very inconvenient. Whether, in terms of government attitude, is it somewhere that we can, that come out and say we promote, the use of these to demonstrate Hong Kong, as a tech center? And I mean, these are all things we have to discuss. It's not about technology.
Thank you, both. At this point, I would like to open the question and answers sessions to the floor and see who are some of the people who would like to pose questions. So, Emil, please. By the way, please identify yourself and then ask the question.
Thank you. My name is Emil Chen. I was an old member here. I left the club solely because I lost my job. The bank left Hong Kong, and then there's a corporate membership. So I'm very happy to be here. So that's me. I'm promoting FinTech for ages. And I heard that, Hong Kong is lagging behind, particularly to Singapore lately. And I also understand that payment is one of the key area that we lag way behind the world to a certain extent, particularly to mainland China. So that's one solution, talking about tech. We are moving the money from printed, the banknotes, to credit cards with PayWave alike. And China is one of the place of the country introducing central bank digital currency. So by changing the carry of money from paper to tokens. So I think that's maybe a solution that solves all the problems you mentioned. So may I have your opinion, say, is Hong Kong ready? Are the policies, are those underlying, particularly personal data protection? We have to get everything ready so that we can enjoy using our mobile phone or the new generation of Octopus to use a digital Hong Kong dollar, for example. Thank you.
So is Hong Kong ready? I think that's your question.
I think, Emil, your question actually simplified, the whole monetary system into paper money or token. So people in banks here, we all understand, the whole banking systems or the way money has been created over the last 20 years has some tremendous, changes. I think last year, US alone created the most liquidity in history. And a lot of these are not printed money, money were created in the banking systems. And if I remember the thing correct, you can always check online, I can't remember everything. But I think in Hong Kong, capital in circulation, is it 30 萬億, right? 30 trillion Hong Kong dollar in the system. You can check on MA website. And printed money now is around only 6-7 億, 600 billion or 700 billion printed money. So actually money has been created in the banking system, without printing out. And token is only one way of carrying the value. It's something we can try as a system to better track the history of capital. I wouldn't say maybe liquidity, attract the liquidity and its flow is a tool. And CBDC is another way the government issue liquidity instead of through the banking system and with a better tracking. And of course, there has been many good use of that being tokenized. You can track with better transparency. And what we're saying is token, it can be programmable money. So let's say we mentioned about the consumption coupon, that people will say, I give consumption coupon to Joe, and now government, we want to let this money only be used for F&B, not for other things. Now we cannot do it, it will be very complicated. The cost of issuing that particular used coupon, consumption coupon or money to this person, how do we make sure it has only been used in restaurants? Then you have to do all these changes in restaurants' payment system, that this is only the thing that they can receive. So in the end, the administration cost will be higher than issuing the money. So we cannot have personalized consumption coupon. But with token, we can do this. We can program the CBDC to Joe, which can be only used in certain area. So that would be easier to adjust. So that's the power of technology and tokenization. So it's a tool. And whether using token to provide further liquidity without government approval, that's the crypto thing we have to talk about. That's the legislation issue. But letting people create liquidity is always a big question, not just for Hong Kong. I think for US, China already made its stance in that. US now having SEC to regulate, a lot of the process. And I think that is something that we will see how different countries reflect to this. Europe will say, hey, okay, we let the big brother decide. But we have to decide on how these asset class will be in future. And I think many countries are in discussion of that. And I personally think if you let everyone have the ability to create liquidity, that creates problem every time you see in history. If you go to the Tang Qiu in Tang Dynasty in China, I think the death of Tang Dynasty is on public creation of liquidity. If you look in the histories, it happens a lot. You let people have silver, that they can create their own Tongqin, that coin. That's how the country died, not because of the emperor, having too many wives and stuff. So yeah, I mean, that's a big question, and I think every country has to look into it, not just Hong Kong.
Well, thank you. I'm sure, Paul, you have, from your perspective as a payment guy, you're going to have a lot to add to it. But I do want to see any other questions. Just raise your hand so I can identify you next. Okay. All right. Okay, so please, Paul, your
Thank
comment,
you.
and then I'll get to you. questions.
Yeah, I reckon that tokenization is a sexy but complicated solution. And at the end, cashless does not equal to tokenization or CBDC or stablecoin. It has other solutions which can be implemented quite quick. But I'm not going into the technical detail, but I just want to add a bit on why cashless can help Hong Kong. It's not just because, oh, okay, we can pay taxi easier. It's just to see it, to consumer benefit. But indeed, in other countries, like in mainland US, Europe, we have some live case that this can help the business to work as well. Small shop, cha chan ting, tea shop, tea restaurant, they cannot get financing, cannot get equity investor because people cannot audit their revenue if they are receiving cash. And this has been solved in mainland quite extensively because of the Alipay or WeChat Pay. And therefore, you see in the past few years, there are lots of restaurants, small restaurant or restaurant chain going to the capital market to get IPO because now the auditors, the investors are more willing to invest in this type of traditional business model. So that's the benefit that cashless can bring to the business that really help the economy. So I think in addition to the long-term vision on CBDC, I think there are something that Hong Kong, no matter the government or banks, can add value to the business world.
Thank you. So I'm going to be efficient about it. And folks over here, right there. Please, Mike, identify yourself and ask the question.
My name is Martin Sabine. I'm an associate member. I work in not very tech fin. Mr. Chiu, you mentioned Israel, and one thing about Israel is perhaps a government with a lot of interest in putting money behind tech for military or other reasons, and many tech advances have come from defense industries or military applications. Governments can then justify the eye-watering amounts of money needed. You mentioned the amounts in the budget here, but these are small amounts, really. Do you think the government here has any appetite to put, the necessary money in, or does it have to be very selective? And you also mentioned ChatGPT. Now, as I understand it, not available in Hong Kong, but pointless, because I'm sure most of us have tried it. And the university is another point in tech. Now, I think Hong Kong banned its students from using ChatGPT. As I understand it, Hong Kong UST, though, is voting in the faculty that either they're going to ban it or, preferably, let students use it, but disclose how they use it. And isn't it that the way to go? Don't we have to have a change of mindset on that? No.
Thank you.
Thank you, Martin. Haven't seen you for some time. You still do the run at Bowen Road? Oh, okay, you did. I think you're one of those that did it for 50 years and, at Bowen Road. Thanks. And thank you for the question. Comparing to, I do go to Israel a lot previously for the last few years with our first fund. And I think there's a lot we can learn from Israel. And, whether government should put in money to kickstart the ecosystem, that thing also has a lot of discussions in Hong Kong. Because, if we look at countries that actually did well in technology, well, if we look at US, it's actually, everything started from the private side. There has been a few startups in Silicon Valley, and then, things just keep rolling. You have successful entrepreneurs, and they success the next, and then your good school talents coming into the pipeline. It's actually quite contained in the private sector. But actually, if you say the government has not been involved, well, it's not also. Say it's Tesla. It started with a debt from the Commission of Energy or something in the U.S. And then now, the CHIPS Act, where government very proactively said, okay, we have to invest into this. So every country or city plays a role in planning for the how they would develop technology. And now that every country is trying to build technology, because this is the competitiveness of that country or city you have to fight for. UK just announced they want to build this Silicon Valley in UK between Cambridge and Oxford, right? So they're also putting in some investments over there. So I would say that every country is putting in some effort, but we always say that you can't always rely on government to building a technology ecosystems. Shenzhen now, the private sector investments is double the government investment, even though the government investment is still huge. Shenzhen invests around 140 billion into tech and R&D related last year, which is more than the 5 years that we have invested in Hong Kong. So the role between government, private, and public is always a big questions. And Israel model, I think that's one thing that I'm always promoting we can do in Hong Kong. Because Israel, one, government initiate is one thing. Second, it's a very vibrant private market. There's many Jewish people everywhere in the world make their money, come back to Israel and fund these startup companies over there. That's also providing a huge pipeline into that. Finance, the military maybe, yeah, it's definitely one reason. They have all these companies, especially in cybersecurity. So government adopting local technology is one thing. In Hong Kong, we're always promoting, I have promoting that for 20 years, that the government should buy local created product. Because now what we do is we buy outside product through a tendering system, and then people here only do system integration work where we never created our own product. We're just using outside product and customize it. So maybe you just do different product, but not creations. So what we want to do from Nexus, we always say from application to creation. So the turn of technology in Hong Kong, that would take me another hour to talk about that. But I mean, the history is we were mainly an adopter in technology for the last 20 years. And now what we want to do is see the path, like my sector representing, now include also the researchers and innovators and the research institutes in Hong Kong, which the last term doesn't include that. And the ITB become ITIB, we added industry in that. So that also means the upstream manufacturing is also included in tech. So we're integrating application technology to research people in the industry and also to industrial company. These are all under one bureau. So hopefully the efficiency of that is to provide ease of producing innovations in Hong Kong, but not application only. So, I mean, that's comparing to Israel. Sorry, I know I overrun a lot. So comparing to Israel, what they do is they only create pipeline in early stage company. You don't see any Series C or D company in Israel because they will be in US, they'll be in Europe, they'll be outside. Same for Hong Kong. All the unicorns we created, the 18 unicorns you can see, most of them, they start in Hong Kong. DJI, they go to Shenzhen. So that's why they become successful, right? The few unicorns we have now, they all start in Hong Kong. We do the research area, validate the technology, and then they have to go to somewhere outside to grow. So I think that's natural, the way we plan this in Hong Kong. But should I get back to the ChatGPT thing?
I'm sorry, the staff is signaling with us that we actually have a luncheon we have to set up for this. So I'm going to take one last questions, gentleman right here, and then maybe you can get to it after it. And I'm sure, hopefully, you can stick around and answer some questions. So
very short. Emin Lau, experienced fintech investor and corporate finance professional. I have two comments. I want to get the views of the speakers, whether you agree or not. First of all, I'm very glad to hear we're playing catch up in Hong Kong, and we have like the talent program to attract people and different plans to boost up the industry. But my observation is there's no orchestrated way of doing that. Like the talent inclusion program, we don't have a priority. Meaning, some of the people I've heard, they actually granted the talents as a fresh grad master degree, fresh graduates. Should we have some priorities in terms of which particular subsectors are we promoting in Hong Kong, especially when we are catching up? For example, is it related to AI? If it's AI, is it related to like neural networks? Should we focus on some sub-segments instead of having a very grand and large plan? That's my
we
question.
have priorities. So there's two programs. The 高才通 ranks about the top 100. That's a generalized. And then there's a 優才. You have to score among different industry and sectors. So we do that and we review the list every time. Yeah, every year.
So I'm going to just real quick, the lady right there at the corner, you want to ask the questions, and then I'm going to just please ask the question, and then we'll probably all comment as a summary. And so, quick question, please.
Okay, quick. My name is Justine from PolyU. So regarding the financial data infrastructure of Hong Kong, the common data interchange built by HKMA is a very good example. Helps the SME to get banks loan much quicker. So in the future development of data sharing, especially inside the government, do you see any future development which would add to this data infrastructure? Thank you.
Yeah, I mean, CDI is a good advertisement, you know, about all the commercial data. Inside government, we always been complaining that it's been in different silo. And there are quite a lot of restrictions, especially through the PDPO, limiting a lot of the data transmission sharing between governments. So one thing I would promote is, in my last submission, is to really create a, just jump forward from I am smart to the next generation thing to a digital ID. So maybe through a DID, that's easier to solve all these things. Otherwise, we are now just moving a little step at a time. You know, we're having this exchange between information between different government, but, you know, it's not under one umbrella. And sometimes through federated learning and stuff, you desensitize the information, may not work in the end. It helps. So we are now, the way the government proposed system is to increase the I'm smart, you know, step by step. But if we can jump through to a new system with a DID is something I recommend.
Thank you. So thank you both, Duncan and Paul, and for the discussions, and thank you for participating. As the moderator of this discussions, I get to ask the last question. So Duncan, given your interest in tech and this is your route, and in your career and political trajectory, are you open to see, or do you see yourself taking up additional responsibilities, including the top jobs in Hong Kong in the future?
I think 1.5 years ago, I wouldn't imagine myself being a legislator. I really haven't think about really joining this. But I would say, you know, sometimes you just never know. I didn't study tech, and I go into tech. I think Martin knows the history. I think it's just because this is the only thing my family haven't done in the history. So I want to try something new. So I wouldn't anticipate myself being here. I've been possibly 1.5 years ago. So I don't know. But I'm very, and I enjoy very much what I'm doing now. I think this is contributing a lot. So yeah.
Well, with that, again, thank you. And thanks for those watching online.